Welcome back to Explain the Charts, where we break down the news and chart data to give you a clear picture of where a stock is headed. Today, October 2nd, 2024, we're taking a look at Intel Corporation, a semiconductor giant that has been struggling lately. Looking at recent headlines, we see reports of Intel's stock sinking amid concerns about potential delisting from the Dow Jones Industrial Average, a major indicator of blue-chip performance. This decline is attributed to disappointing second-quarter earnings released last month, which pushed Intel shares to their lowest point since 2013. However, there's also good news for Intel, with the company expected to receive $8.5 billion in direct funding from the U.S. government before the year's end, which will be critical as it navigates the shifting technological landscape. So, with this mixed news in mind, let's jump into the charts to see what the technical indicators reveal. We'll start with the daily chart, which provides a broad perspective on Intel's price movement over the past year. As we scan the daily chart, we can clearly see the downward trend that began in early 2024. The price has been consistently declining, with a series of lower highs and lower lows, a classic bearish signal. We can also observe a clear breakdown of a significant support level around $35, which is a further indicator of the current bearish sentiment. The recent dip below $30 further reinforces this negative outlook, as it signifies a potential shift in sentiment. Now, let's zoom in on the 1-hour chart to gain a more detailed perspective on Intel's recent price action. On the 1-hour chart, we can see a significant drop in the price over the last few trading days. This decline has been punctuated by large trading volumes, indicating strong selling pressure in the market. We also notice a clear resistance level at around $25, where the price has struggled to break through. This resistance level could act as a barrier to any immediate upward momentum, making it a crucial price point to watch. Let's move to the 15-minute chart to analyze the very recent price movements and identify any potential short-term trading opportunities. The 15-minute chart shows some signs of a potential short-term reversal. The recent price action has formed a double bottom pattern, which is a bullish technical formation. This pattern indicates that the selling pressure may be easing, and the price could be ready for a bounce. However, it's important to note that the recent large volume on the 1-hour chart suggests that the bearish sentiment remains strong. So, while the 15-minute chart might offer some short-term trading opportunities, it's essential to be cautious and consider the broader bearish sentiment. Now, let's focus our attention on a specific period within the daily chart. We'll examine the candles from September 16th to September 27th, a period that demonstrates the volatility and uncertainty surrounding Intel. During this time, we see a dramatic drop in the price, breaking through a key support level around $25. This breakdown was accompanied by high trading volume, indicating a strong surge in selling pressure. Following this breakdown, the price fluctuated within a range, suggesting a period of indecision and uncertainty in the market. This range could be interpreted as a potential consolidation period before the price makes a significant move in either direction. While this range doesn't necessarily indicate a change in the overall bearish sentiment, it does highlight the possibility of a short-term bounce within this range. It's also worth noting that the price has bounced off the $22 level during this period, suggesting that this price point might act as a new support level. Let's wrap up by summarizing the key price levels and their potential implications. The $35 level, which previously acted as a support level, has now become a key resistance level. The price is unlikely to break through this level in the short term, especially considering the recent bearish sentiment. The $25 level, which was previously a strong support level, was breached during the recent decline and has now become a key resistance level as well. This indicates that the price may struggle to rally above this level in the near future. The $22 level has acted as a new support level in recent weeks, suggesting that the price may find some support here. However, it's important to remember that the current bearish sentiment could push the price below this level if the selling pressure intensifies. The government funding announcement might provide some bullish momentum to the stock, but it's too early to tell if it will be enough to overcome the current negative sentiment. Therefore, it's crucial to closely monitor the price action and volume indicators to gauge the strength of any potential reversals. Look for a break above the $25 resistance level or a surge in volume accompanying a price bounce as signs of a potential short-term bullish turnaround. Conversely, a break below the $22 support level or sustained high volume on declining prices would reinforce the bearish sentiment. Ultimately, Intel's future will depend on its ability to overcome the challenges it faces and deliver on its promises for the future. We'll continue to monitor the news and charts for any significant developments and provide updates as the market evolves.